Welcome back to our ongoing documentary explainer of the GoldMining Europa strategic series. Today, we're calmly and analytically unpacking another chapter in this long-term trading journal. We'll be breaking down the hard data, the strategy, and the very real market conditions that are shaping this unique journey.
This week, we're diving into week 27. The main theme here, momentum and recovery. It's a truly crucial period where disciplined EURUSD execution and strictly controlled market exposure are put to the absolute test against shifting and sometimes pretty turbulent macroeconomic tides.
Now, as always, our analysis is grounded entirely in one core philosophy: real accounts, real risk, real progression. We are looking at a completely transparent trading journal because, sustainable trading is absolutely about consistency and highly managed risk over the long haul. It's definitely not about chasing occasional reckless large windfalls.
The strategic objective.
So, to properly contextualize the data we're about to see, we really have to remember where this long-term documentary experiment actually began. It started with a very humble, real money starting balance of 2,500 cents. To put that into everyday terms, that's an original deposit of approximately $25. It's a real cent account specifically designed to prove a concept.
And the strategic objective here is to methodically compound the small balance towards 10,000 cents, which is roughly $100. And we're doing this through highly systematic, risk-averse, institutional-style trading. It's a marathon, not a sprint. Every single cent earned is another step toward that 10,000-cent finish line.
Macro to micro, market drivers. Now, to really grasp this week's performance, we've got to look at the macroeconomic forces at play. The market was navigating some seriously heavy external pressures this week. We had the highly anticipated U.S. non-farm payrolls data, shifting expectations around Federal Reserve interest rates, sharp Treasury yield movements, and of course, an overarching wave of broader U.S. dollar strength. But here's the thing. Volatility creates the very trading opportunities needed to generate yield, provided you have the patience to execute correctly.
Translating all those macro events down to a micro level on the EURUSD 15-minute chart, just take a close look at the executions mapped directly onto the price action. You can see exactly how global macroeconomic events translated into sharp, unpredictable price swings. Navigating this kind of chop demands extreme patience. The algorithm had to identify highly specific execution windows amidst all that noise, stepping in only when the probabilities perfectly aligned.
Week 27, Performance Metrics.
Pulling up the direct MetaTrader 5 report, the numbers confirm a steady, highly controlled weekly gain of 1.20% for the account. Now, in the world of sustainable compounding, a 1.2% gain generated safely over just a few days, that is a fantastic metric.
Drilling down into the actual financial value, this 1.2% gain translates to a calculated extraction of 31.22 cents in net profit. And this brilliantly illustrates the sheer efficiency of the strategy. It generated this profit with a highly favorable profit factor of 1.17 for the week, meaning the gross profit comfortably outpaced the gross loss.
But honestly, the most crucial point is how that profit was actually made. As this transaction log proves, the 31-cent profit wasn't the result of one lucky over-leveraged gamble. Look at the ledger. Multiple small, incredibly disciplined EURUSD sell executions. 4 cents here, 2 cents there, 1 cent there. It's the gradual, systematic accumulation of capital through precise, repeated action.
Mapping those specific trades visually, notice how the equity curve, despite some minor floating fluctuations, stabilizes and steadily climbs upward over the week right alongside the balance line. This smooth climb successfully raised the current total account balance to $2,641.51.
Let's move to the wider lens and see how this actually builds. Zooming out to the lifetime performance since the account's inception, this steady weekly effort has now pushed the total account growth to a positive 5.66%. The engine is running exactly as intended, slowly but surely pulling away from that original 2,500-cent starting line.
Risk and deposit load.
In institutional algorithmic trading, how you protect your profit is paramount. Looking at the weekly drawdown chart, we see a brilliantly flat red line running across the top, finishing the week at exactly 0%. Despite all that macroeconomic turbulence we talked about, the NFP data, the dollar strength, the system experienced virtually no closed realized drawdown for the week. This highlights some truly incredible capital preservation.
Furthermore, let's look at the actual capital exposure.
The maximum deposit load for the week, which means the highest percentage of the account balance actually used as margin to hold these trades, remained practically microscopic. It peaked at just 0.805%. The system kept over 99% of its capital safely on the sidelines at all times, proving absolute conservative control over market exposure. This is exactly how you survive long-term.
The consistency philosophy. It is so vital to remember that sustainable trading success comes entirely from consistent execution. Now, a financial gain of 31 cents might seem incredibly modest to an observer used to flashy, high-leverage internet trading content, but it's entirely profound when viewed through the lens of longevity. It represents a highly calculated, risk-averse victory executed within a volatile global environment, all without exposing the core capital to unnecessary danger.
Because when you stack those modest, safe weeks back to back, you get this. The continuous, steady, upward trajectory of this balance line across the lifetime of the account is the truest indicator of a sustainable strategy. This is a system operating precisely as designed, absorbing market shocks and slowly turning time into equity.
But, of course, the market never stops moving. As the macroeconomic landscape shifts with new interest rate narratives and geopolitical events, a critical unknown remains. We are left to wonder how this controlled exposure model will adapt to future market shocks as we continue this steady, methodical march toward that 10,000 cents goal.
I invite you to continue following this ongoing documentary explainer as we calmly and analytically record the genuine evolution of this strategy week by week as it navigates whatever the markets throw at it next. Real accounts, real risk, real progression. Ultimately, the question we're left with is, will this tightly controlled exposure model continue to weather future macroeconomic shifts on the long road to 10,000 cents?